Welcome to your Mortgage Insider Update. It is July the 7th. We have survived the 4th of July holiday weekend. There were some tragedies down in Texas, but for the most part, a couple of fireworks buildings blew up, and we're moving into the third quarter here in full swing this week. So we're going to take a look at the results post the jobs report. The jobs numbers came in a little bit better than expected, but not fantastic. 140 some odd thousand jobs created. It's like 7,000 more than expected. The unemployment rate, though, is the big one, dropped down to 4.1% for the wrong kind of reasons. Less people are looking for jobs. So less people looking for jobs, but also less hiring took place. So there was actually more people leaving the workforce than there were less jobs available for folks to go after. So that's why the unemployment rate actually dropped. So not what we were hoping for, as a clear sign that the Federal Reserve would have an opening to start to cut interest rate at the end of this month. Their next meeting will be right at the end, I believe it's July 30th. At the same time, the PCE, the last of the inflation reports, the Fed's favored measure of inflation, will come out. So there's going to be data up until the week of their meeting that will determine what the outcome. Now they will skip a meeting and go into September. Many people would remember last year, July, the Fed did not cut the rate. They waited till September and did a 50 basis points or 0.5% cut. So we're hoping for no repeat there. Would be very helpful to get started with a small cut of 0.25% on the interest rate. The projection is that by the end of the year, they would cut twice. They still have a lot of meetings left, so it's not necessarily that this is going to get started anytime soon. So let's see where we sit with rates. So we do kick off the week slightly higher with the 10-year Treasury up. It's been up the last couple of trading days. The last day was on Thursday, the day that the jobs report actually came out instead of Friday, because Friday was the 4th of July. So mortgage-backed securities acting in the inverse. Red is bad. The prices are dropping, so the interest rate is increasing to the consumer. We can see we had, prior to the end of last month, had been trending down in interest rates, and just like we've actually looked at in the past, the last couple of months, when that first Friday jobs report comes out, it comes a little bit better than we anticipated. So the first round of this actually came out on Wednesday, July 2nd. ADP came out with an actual really negative report. There was little jobs lost in the private payrolls from ADP. But the Bureau of Labor Statistics, their report's the one that everybody pays attention to. That was Friday, so we see that we've gone right back up into these averages. So we had been on the increase for the blue line is a 200-day average. We've been in an increasing rate market. Recently here, we've turned over the 25-day period. We were downward, and now we're jammed up in a lot of these moving averages. Now, this could very likely go much higher, like we saw back at the beginning part of May into the mid to late May of this year. But we've seen it bounce around, so we could stay in this level. There's not a lot of big data points coming out this week, so we will keep an eye on it for you. So making a great start to July and a great start to the third quarter as we kick off, hopefully, the busier side of the season, busier than even the first quarter. Typically is kind of slow. Second quarter picks up steam. This year, the steam has been delayed. Tariff talk, a lot of angst over inflation, interest rates has kind of held things up. So let's look into the third quarter to really be a step in the right direction. Have a great week.